Hello and welcome to Business Lunch. I'm Nisha Podar, and a quick look at the market at this point. And yes, started almost flattish, but has seen enough momentum in the early part of the trading session, and that is being also maintained by Nifty 50. So at the moment, more than a quarter percentage point up on Nifty 50, 18,208 levels is what we are seeing, with 50 points gain. When we talk about Sensex, 176 points gain on that particular index. But Bank Nifty, which was seen to be the outperformer, is now underperforming the key indices, almost flattish to in the green in the trading session. Mid-cap universe in line with the key indices. So that pocket is participating in the market play, and because of mid-cap participation, the advanced decline ratio, the market breadth is not as weak, though still slightly on a higher side when it comes to the declining stocks. And Sonia is joining me on Business Lunch. So Sonia, market showing a good amount of green today on the screen.
Well, a good amount of green, but you'd have to say that this is a market that has a lot of headwinds, right? I mean, the global cues are a bit on the weaker side. You have the China COVID issues, which are sort of putting a lid on crude as well. There are some demand concerns. And apart from that, FIs have been selling in India for 2 days now. So let's see. The all-time highs that were just about coming are now looking a little more elusive. But for now, I mean, the Nifty is holding on to that 18,200 mark. But let's get straight to a CNBC-TV18 exclusive. European MNC is eyeing a major stake in Unichem Labs. So that's the latest that we're picking up at the moment. Vivek is joining in to give us more on what he's picking up from sources. Vivek, which is this MNC and what is the kind of stake that they're looking at in Unichem?
Well, Unichem Labs is the stock in focus, is the company in focus. What we are understanding from our sources is that a major European MNC pharma company is eyeing, quite a significant chunk as far as, the entire promoter shareholding is concerned. What we are understanding is that the talks between this particular pharma major and the promoters right now is at a significantly advanced stage. And we understand that, this particular block, remember when you're talking about Unichem Labs, the promoter owns almost 50.93% stake in the company. And Unichem Labs, even in the past has divested certain parts of its business. If you recall, in 2017, the company had divested the domestic formulation business to Torrent Pharma. And also, when you're talking about Unichem Labs, we had reached out to the management. The management has told us that, at this point of time, these are market speculations, and we don't want to comment on market speculations at this point of time. Unichem, remember, FY22 revenues, just looking at the financials, close to 1,270 crores of revenue, profitability at around 33 crore. And the USA market is a significant market for them. Almost 55% of the revenues comes in from the US market.
That's right, Vivek. Thanks for getting us this exclusive. But for Unichem, succession issue, and therefore the deals every now and then, deal talks, have been actually one of the news flows that we have been really taking a note of. But Vivek, you're also tracking the stock Nykaa, which is under pressure today after 1.84 crore shares changed hands in a block deal earlier today. Tell us more about this particular overhang and the pressure and the block deal, as well as the valuations at which people are buying.
Well, that's right. So Nykaa, again, this particular stock, post the expiry of the lock-in, what had actually happened is that, most of the anchor investors, most of the pre-IPO investors were actually, allowed, or now they are free to go ahead and sell their shares as far as, Nykaa is concerned. So Lighthouse India Fund, which had already earlier had sold close to 3 crore shares in the company on November 16, sources indicated to us, and we had reported this earlier today as well, pre-open. We had told you that Lighthouse India Fund was looking to sell the remainder of its share as well. The price range of this particular deal was expected between 180 to 183 rupees per share. And, the size of this particular block was close to 335 crore. So it appears to be a cleanup trade. That's what the deal sheet said. So at least from this particular investor, it appears as though the overhang of a stake sale is done. But despite that, given the fact that the lock-in has expired, most of the stocks, and Nykaa is no exception, they continue to face immense selling pressure.
Okay, thanks a lot for that. Meanwhile, Rahul Chadda, the Chief Investment Officer at Mirae Asset Management, says that the corrections that we're seeing in new age stocks could provide an attractive opportunity because, to be fair, many of these companies are seeing a return to profitability. They're at least talking about a path to profitability. So perhaps this is a good time to be looking at them. Listen in.
Something which we've added is being the food delivery space, the likes of Zomato, where we've seen the company do a lot better in last 2 years in terms of gaining market share, etc. And one got good entry points when the supply came, where the stock was nearly down 30-40% from the IPO levels. So one can be opportunistic in these good companies, make sure that one builds position according to the price one is comfortable with.
All right, so we are talking about the new age companies and they listed, and right now all of them are trending lower, also pressured by the block deals coming in after the IPO lock-in period is over. Paytm is one stock which is on my radar after a huge stake sale by SoftBank. It continues to be down and down over 10% in trade today. Let's talk about Keynes Technology now. That made a strong debut on the bourses today, and the company listed at a premium of 32%. In fact, my colleague Vahishta is here with all the details of the key takeaways that we got from the interaction with the management, with the new kid on the block. Tell us, Vahishta.
Hi, Nisha. Well, thanks for that. As you mentioned, Keynes Technology has had a very strong market debut today. It lists at a premium of 32%, which comes to a share price of 778 rupees per share. The company is an electronic system design and manufacturing services company, and the customers are across its various industry verticals, which includes the likes of automotive, industrial, aerospace, defense, medical, railways, consumer, IoT, etc. The issue size of the IPO is 858 crores, of which the fresh issue was 530 crores and the remaining is offer for sale. The promoter holding before the IPO was at approximately 80%, and post-issue the promoter holding falls to 63%. The proceeds of the fresh issue are expected to be utilized for investments in their subsidiary, repayment of their borrowings, working capital requirement, and also for funding the capex at their existing manufacturing facilities. We had the management on our channel today morning, and they've been quite optimistic on the growth prospects of the company. They say that FY23 revenue guidance is at 1200 crores, which is to be compared with FY22 revenues, which were at 706 crores. So there's a major jump out there. By FY23, the EBITDA margins are expected to grow to 14.5%, compared with 13.3% in FY22. The medical electronics is a focus area for the company as it is a margin accretive business. The aerospace, defense, outer space segment will contribute at approximately 8 to 10% of revenues by FY25, which currently is at 3%. Also, in terms of headwinds, the company says that the China-Taiwan war could be a major threat for the growth prospects, as nearly 10% of their raw materials are sourced from China and most of the processes are made in Taiwan. Back to you.
Okay, thanks a lot, Vahishta, for that. So that's been one that's kicked it out of the fence. Keynes Technology up 20% right now. Let's slip into a quick break, but do stay tuned in. We'll get you all the important voices speaking on the Fed's policy. Welcome back. You're still watching Business Lunch on CNBC-TV18. Well, for now, the market is so very quiet, just sort of taken the day off. It happens towards the end of the year when people take off on holiday. There's no great directional call taken because, later this week, you have the Thanksgiving 2-day holiday as well for the US market. So cues are slightly on the thinner side. But let's get some data out of the way. The telecom sector data for the month of September indicates that Vodafone Idea once again lost a huge chunk of subscribers, while Jio and Bharti Airtel continue to gain. Rima has more on that. Rima.
Thanks so much for that. So this is the DRAI data for the month of September. So it's backdated, but data shows that both Bharti Airtel and Reliance Jio are seeing healthy subscriber addition. In the month of October, on a month-on-month basis, Reliance Jio added 7.2 lakh subscribers, Bharti Airtel added 4.1 lakh subscribers, while Vodafone Idea has seen a big cut, 40 lakh subscribers lost in the month of September. Jio subscriber addition has been better than that of Bharti for the 6th consecutive month in a row. Talking a little bit more about Vodafone Idea, as I said, 40 lakh lost in this month. Since the beginning of this fiscal year, which is in the first H1 FY23, Vodafone Idea has lost close to 1.1 crore subscriber, and its market share too has declined by more than 100 basis points. The subscriber market share as of September for Vodafone Idea stands at 21.75%. But remember, this is data for the month of September, which gets captured in the subscriber data released by the companies in their Q2 numbers. So in a way, this does not come as a surprise because it is captured when both these companies, all these three companies, report their subscriber data for Q2. Back to you.
All right. Thanks, Rima, for getting us all those important details. In fact, Vodafone Idea has been quite consistent when it comes to the pressure on the stock and also losing their subscriber base and therefore the market share on the watch list then. All right, moving focus to Hindustan Aeronautics. That delivered a strong set of Q2 earnings, and the company's order book position is also maintained at nearly 8,400 crore rupees. Let's now listen into the management. In fact, CB Ananthakrishnan, the chairman and managing director at Hindustan Aeronautics, had discussed the earnings outlook as well as the opportunities for the company going forward. Take a listen.
The ratio is expected to be for the FY25. The ratio is expected to be in the range of 50-50% between ROH and manufacturing. But for the current FY23 and FY23 and 24, it will be in the ratio of repair and overall will have a higher ratio of around 60%, and manufacturing will be a lower ratio of 40%. And this will be for the next 2 years. And as far as the EBITDA margins are concerned, we have indicated 24-25% in our initial guidance. Our EBITDA margin also is likely to be a percentage point more than what we have anticipated. So it should be in the range of around 26% is what we expect. So it should improve definitely from what we have earlier guided at 24-25%. For the current year as well as for the next year, that is FY24, it is expected to be at single digit as what I have indicated earlier. It will be in the range of around 8%, and the double digit growth is expected to start from FY25 onwards. We are not aware of any such development. Probably the government of India will be in a better position to tell that.
Okay, that's one of the biggest movers in the last 1 year, HAL. But from HAL to HUL, some more corporate commentary coming through. HUL's chairman and managing director Sanjeev Mehta says that volumes in rural India are seeing some stress and demand may pick up only once commodity prices soften. He's also quite uncertain on the future price hikes as they are closely linked to unpredictable commodity prices. Listen into the comments that were made.
There is a stress on volumes in rural India. But the good bit is that the headline growth is still there.
When can we expect a revival in the rural economy? And
you know, there has to be a trigger. And one of the trigger will be when the commodity prices start softening.
correct.
And when they start softening, I see no reason why the volumes won't come back. Difficult to speculate. It's very difficult to put your finger on because they are dependent on many variables. The good bit is that palm oil prices had softened in a meaningful way, though after coming down, they've again gone up a bit, but they are still below their peak. So I think one of the trigger will be if the Ukraine crisis gets sorted, then we should definitely see a softening of commodity prices.
But then the sense I'm getting is that still a few more price hikes on the annual because there is...
Price hike, I wouldn't like to say that there would be. It would really depend on commodity price. And remember something, there is no one-to-one equation between commodity price and the price of our goods.
All right, HL Honcho saying that if Ukraine crisis abates or the war gets over, then commodity prices are going to settle down. Well, that's the big question. When is the Russia-Ukraine crisis getting over?
Entertainment spaces. Don't forget to tune in to CNBC-TV18 on Friday, November 25th, 5:30 p.m. onwards.
Welcome back. You're watching Business Lunch. A quick look at the markets. And yes, stable gains at the moment, 0.3% up on Nifty 50. So slight improvement seen at lunch hour. Maybe there is some energy coming back to the market. Bank Nifty is the one which has also seen some bit of uptake. And the big stocks that have seen gaining momentum and some buying in the last few minutes of trade are IndusInd Bank, Bajaj Auto, Coal India, HDFC Life, NTPC, Isham Motors and Hero MotoCorp. So keep those on your radar. But moving on to something much more exciting for our viewers then. Focus on the world of sports and FIFA World Cup then. England made small work of Iran in the first fixture last evening, in fact, winning by a margin of 6 goals to 2 with youngsters Bukayo Saka, Marcus Rashford, as well as Jude Bellingham scoring for the Three Lions. Now, Netherlands got past a stubborn Senegal defense with Cody Gakpo and also Davy Klaassen scoring late for the men in orange. Now, in the late night kickoff, the United States drew with Wales, with both teams scoring goal apiece. And also in today's standout fixtures, Lionel Messi, my favorite, will play his first game of this year's World Cup against Saudi Arabia in the early game, which kicks off at 3:30 p.m. India time. Sonia will be working at this time, but I'm really dying to watch Messi. Also, it's his last World Cup before he retires. So this time, the fans are going to be glued to their television for this particular match.
Absolutely. It's the last time you're going to get to see the icon at work, right?
Yes.
In the last World Cup ever. So it's going to be a big game. Argentina, Saudi Arabia, that's at 3:30 p.m. There's also a very good game in the night. Mexico, Poland at 9:30 in the night today. So tonight.
That will be interesting. So, and even though Lionel Messi may be on his way out, many more new stars will be created in this particular World Cup.
Absolutely. Okay, so that's all the sporting action. But with that, it is curtains down on Business Lunch. Mid-Cap Radar comes up next. Stay tuned.